welcome to Finforall by Jupiter. My name is Dipansha Dhingra and today we are going to discuss investing versus trading. Investing and trading have both become insanely popular terms these days. So popular that at least one of your LinkedIn connections would have something like investment guru or crypto trader under their name. Or maybe that one connection is you. But while most people use these terms interchangeably, investing and trading are very different. Let me explain one by one. Investing is traditionally related to buying stocks, bonds or other financial instruments to fetch profits over a long period of time. Basically, you keep holding on to the stocks or bonds you buy, just like all those wire in your drawer, hoping, I am going to need that later. Well, the aim of an investor is to create a balanced portfolio of different stocks and bonds which give good and stable returns through increase in value, dividends or interest income. Investors do not sell their holdings regularly. They keep investing money for the most part. Kind of like your parents putting in the money for your degree and hoping everything will turn out okay. It is only in case of an emergency or when the stock has met its long-term targets that an investor will sell the holdings. And since you are thinking long-term, investing enables you to attain financial security. We have talked about financial freedom in another video, so please make sure you revise the syllabus. Link is in the description. Now let's talk about trading. Since we are talking about differences and you are super smart as is, you have probably figured out that trading is the opposite of whatever you just heard. Trading is associated with actively buying and selling stocks, commodities, currencies, bonds or other financial instruments over shorter periods. This is primarily to make profits from the short-term volatilities in prices of these securities. In more relatable terms, the duration of trading is almost as long as that forever wali relationship in the first year of college. We have all done that, right? A huge example of trading is the crypto market. You remember how the Dogecoin went to the moon? I, as an expert trader, gained a whole 57 rupees back then. Not showing off, of course. Thank you. It is certainly one of the greatest achievements of my life. If during that whole phase you didn't buy low, sell high and kept those Dogecoins in the wallet because you expected the market to get bullish, then chances are that you are still salty about the crypto market going red in the recent times. Assessing good trading opportunities typically makes use of chart readings to detect short-term patterns and trends in prices. This is called technical analysis. Traders have to constantly monitor the market so they don't miss out on profits, and sometimes the stocks or bonds are sold within seconds. We'll get into the details in a bit. Now let's talk about some things you should be looking out for while investing or trading. If you're a complete newbie, you must try to always look at 4 things before investing. Number 1. The industry your stock or bond relates to. For example, since we are trying to create greener automobiles, industries like electric cars are likely to see a boom. FMCG or fast-moving consumer goods producing companies are almost always in growth, given that the population is ever increasing and so is the demand. Number 2. Price to earnings ratio, या PE ratio. This is calculated by dividing company's price per share by earning per share. So suppose the price of a stock is rupees 20 and the return is rupees 2, your PE ratio would be 20 by 2, that is 10. You're essentially giving 20 rupees for a profit of 2 rupees, which isn't as bad as it might sound. PE ratio by itself won't tell you much. You have to check how your preferred company's stock is doing in comparison to others within the same industry. Rule of thumb is that PE ratio below 20 to 25 is considered good. Dividends. If you aren't exactly someone who understands the market in depth, then you should look at dividends. Dividends are like interest in a savings account. You get paid regardless of the stock price. Dividends are distributions made by a company to its shareholders as a reward from its profits. So in that sense, this is a pretty stable and regular source of income. For a steady company, of course. Number 4. Charts. Yep, it seems too complicated, but basic chart reading skills can help you with your investments. If you already invest, you must have seen a couple of charts on your investment apps. They give you a short-term and a long-term view of the performance trend of your stock or mutual fund. Whenever you read a chart, make sure you look at the long-term trend, like 3 or 5 year projection, because short-term volatilities are extremely common in investing. There are many types of trading depending on your level of expertise and time you spend in the market. Like scalping, where the positions are sold within minutes or even seconds. Day trading, where positions are sold within the day and not kept overnight. Swing trading, where positions are held for slightly longer, like a couple of days or weeks. And position trading, where positions are held for months or years, which in essence is like investing. The most important skill for trading is constant market monitoring. Especially if you want to get into scalping or day trading, you have to make sure you not only have a great amount of knowledge but are also super vigilant. Opportunities can arise at any time during trading hours. Isliye being aware and moving quickly are very important. The other important thing which nobody wants to hear is that you need to know how much you are willing to lose. So start unemotionally, because just like many of those forever relationships, not every stock will have a happy ending. In conclusion, for most people, life is not the Wolf of Wall Street. Whether you invest or trade, what's important is that you keep yourself financially educated. Now, that doesn't mean that you need to understand just about everything, but basic knowledge and trend watching skills can really help you. If you're already a salaried employee, then you should definitely make it a point to keep investing every month. Little but consistent investment can give you great returns in the long term. That being said, choose to invest or trade as per your financial goals. But it is definitely advisable to aim for long-term benefits along with short-term profits. The rest is of course upon your discretion. We know you are a smarty. Thank you for staying tuned. For more on finance and everything beyond, follow Finforall by Jupiter on YouTube, Instagram and LinkedIn. Don't forget to leave a like and share your views in the comments below.